And it's high noon in the financial capital of the world, and we are still waiting for Washington to stop the clock before the largest tax hike in U.S. history. Live pictures we've got for you right now from the Senate floor, where Democrats continue to attack President Obama's tax compromise. The White House again says it's open to changes. Will the Dems stop arguing and act? Also ahead, we'll tell you about a winter storm moving in, threatening airline travel across much of this country today. And if you're stuck on a plane, how about going shopping? You know this name. Sky Mall President Christine Aguilera is here to tell us why her business is booming right now. Hi, everybody. I'm Cheryl Casoni. Joining me for the hour, James Frischling, co-founder and president at NewOak Capital. And here to talk taxes and much more, Wall Street Journal Deputy Managing Editor Alan Murray, kind enough to join me today. Guys, stay with me, Alan. Here she is again, Nancy Pelosi. She's out. She's making noise. We weren't included. We don't like this. Does she have any power? Can she really go against President Obama?
Well, it's funny. Peter mentions 1986 when Reagan was in the White House and working with Democrats in Congress, and the Republicans in Congress said all the same things. He's cutting us out. He's not working with us. You know, that's the nature. That's the nature of being a minority. If the president wants to get things done, he has to work with Republicans in the House. So I think she's going to have to get over it.
She's going to have to get over it. Harry Reid seems to have. I mean, the Senate, at least, Alan, seems to be willing to, go along.
But there is a problem here. You're hearing different things from different Democrats. If you listen to the moderate conservative blue dog Democrats, of which there are many fewer than there or will be many fewer in the new Congress, what they're saying is something different, which is what in here helps us at all with the deficit problem. I mean, you've got almost $900 billion that we're going to use for tax cuts, and nothing gives any confidence that they're prepared to take on the deficit after that. Economists will tell you the right thing to do is, yeah, sure, do some more stimulus next year, but show that you're really ready to make the very tough decisions you're going to have to make in the year after and the year after that. They've done nothing on that front.
And James, obviously, Wall Street knows all about carrying debt. We did it 2 years ago. Look where that got us. Now, though, you've got basically a lot of investors, in particular in the bond market, waiting for a decision, and they can't make any moves until Washington makes theirs.
We're not loving the uncertainty, and I think what's very frustrating is the political sensitivity around raising or not allowing the tax cuts to continue, and therefore hitting Americans' paychecks at a time when the economy is struggling. However, to Alan's point, that's an incongruent message to how do you then scream about the deficit being out of control? Because these extending the tax cuts plus the jobless and the other Obama reforms are going to cost about $1 trillion or 800 to 900 billion. That has nothing to do with tackling the deficit.
Yeah, there are two kinds of uncertainty, right? There's uncertainty about taxes. I think that'll probably get worked out in the next 2 weeks. And there's uncertainty about the deficit and how the hell is it going to be unwound? And that's the one that's...
Alan, does the street really care about the deficit overall? Or are they more concerned about policies that will make their businesses better?
I'll take a shot and say we care more about the policies and to a certain extent less about the deficit, because the fact is, with the low rate environment that we're in, we've seen the benefits to the stock market, and to a certain extent I expect that the low rate environment to continue and benefits of the stock market.
But you've gotten an early warning there in the last week with rates. Why are rates moving up? In part because people see, well, geez, we're going to spend another $800 billion, and there's still no real sign of a plan to take on the deficit. And tax reform, by the way, the 1986 tax reform bill was revenue neutral. It didn't do anything one way or another to the deficit. It's a good idea, but it doesn't deal with the deficit overhang that is a big problem for the economy.
And Peter, I mean, that is the question that Wall Street has, but Washington, again, I go back to all this infighting that we've seen, in particular with the Dem caucus yesterday. I mean, does the president, do you think, have finally an ear open through his economic advisors that he's got to deal with the deficit and he's got to get Republicans on board next year?
Well, like all the politicians here, everybody hates the deficit, including the president. He set up that fiscal commission, which issued its report. He says that he is going to take its recommendations seriously to try to move forward on the deficit. But, his other argument is that in the short term, one of the best things we can do to shrink the deficit is spur more economic growth. If you add 1% to the GDP, it generates tens of billions of dollars in new tax revenue. revenue because more people have jobs, they have incomes that can be taxed, payroll taxes are paid.
But Peter, that's exactly the
the
point. Everybody hates the deficit, but nobody wants to do anything about it right now. It's like the country music song, everybody wants to go to heaven, but nobody wants to go now. I mean, that's the fix we're in, and I do think the markets would like some assurance that when the time comes, they're going to be able to deal with this.
I think the Bush-era cuts are going to be extended in this. The anger will subside, and I believe if we go back to the next year is the 25th anniversary of the other major tax reform. So I actually think President Obama and his administration putting forward the idea of a reform. We know it's going to take several years, but this is a precursor to a heavy negotiation at this early stage. So the Bush-era tax cuts get extended, and then we have a 2-year window to watch a negotiation of how to set the stage for what appears to be possibly the next major overhaul.
You know what, though, Rich? I mean, Alan made a very good point about interest rates going up, and we've seen action in the bond market to the negative side, and a lot of investors pulling money out of the bond market over the last 3 weeks or so. I mean, Congress never met an earmark that they didn't like. Do we have any assurances that's going to be any different next year?
Well, on the House side we do, but not on the Senate side. They failed to adopt any type of earmark reform over there. You've got the moratorium on the House side. And when you talk about this entire debate, even when you look at the 11 members of the Deficit Commission, they needed 14 to report this non-binding issue out and force a vote in Congress, at least to force a vote because Speaker Pelosi and Leader Reid said they would have a vote. Nothing really bound them to that. When you look at the 11 folks who supported it, not everyone said they would actually vote for the thing on the floor of the House or the Senate. They say, look, this is a good start, but you've got this fundamental divide in Washington of one party that wants to reduce taxes and spending, another that wants to either maintain spending but raise more revenue through taxes. And what we've got here in this package is a compromise between the two factions that does nothing except heap about $900 billion onto the deficit. Everyone gets, all right, when you get the spending you want, you get the tax cuts you want. And
everybody gets everything. It's
right,
what was
exactly.
30 years ago, Jude Wanniski referred to it as the two Santa Claus theory. The Democrats get to be the Santa Claus of spending, and the Republicans get to be the Santa Claus of tax cuts. But it doesn't help with the deficit problem.
Boy, I tell you, we wanted bipartisanship. Now we got it to the tune of $900 billion. All right, gentlemen, thanks to both of you out in Washington. Peter and Rich, thank you very much, guys. But there's another side to this argument, Ashley, and I want to get James's take on this from a Wall Street perspective, because the other side is that what's the rest of the balance sheet look like at the company? What are your growth prospects, if at all, for next year? I mean, I know that you want to be bullish and see M&A activity, but we may not have it.
I mean, the most common recommendation I'm hearing on the stock market or from stock experts is to look at dividend-paying stocks or companies that have the likelihood to increase their dividend. I also hear about businesses that have distribution in the emerging markets. I hear about businesses that have moats around and are very strong. And here's GE coming out, and I think they hit every one of those categories. And today they announced they're going to increase their dividend. And I think that's an incredibly attractive announcement on their part.
Bullish, Dunstan, but they also have any day now a television network to unload.
Isn't this all part of this sort of oxymoronic dynamic that we're passing through, this jobless recovery, right? I mean, it's essentially a good sign that this company probably cut its dividend during the downturn, and that was historic at the time. Now we're coming back. That in itself is a good sign. But who's being rewarded? Well, shareholders are rewarded. What we really need is investment into expansion to create jobs. We're just not seeing it.
Long-term growth, Ashley, that's what we need.
Yeah.